Welcome to The Interest, I'm Katie Jensen. In this ever-changing industry, it'd be great to have psychic powers. Luckily, you don't need them, because we have our segment Smashing the Crystal Ball coming up. Then it's time to get comfy and enjoy some beautiful poetry about money-losing lenders from our own Vincent Valvo in Poetic Moments in Mortgage. And finally, you won't want to miss our own Sarah Wolak's housing market forecast on NMP's mortgage meteorology. But first, we're going to address a huge issue happening in the industry that most prefer to ignore. But broker-owner of Blue Dolphin Capital, Sam Harris, has no problem stating what he believes is obvious. DEI initiatives are not working. Stay tuned to find out why.
If you look at the last 5 years of DEI professionals, the vast majority of them were white women or white men that were hired to head these departments.
When broker owner Sam Harris is asked what he thinks of DEI, he says that's a loaded question. Of course, Harris wants to increase diversity, equity, and inclusion in the mortgage industry. But a more important question is whether DEI initiatives are supporting DEI goals.
I mean, it's pretty simple to answer. Show the numbers. Where are the results?
The latest study from the National Association of Real Estate Brokers shows that the home ownership gap between Black and white people is higher today than it was half a century ago. DEI supporters know that increasing Black home ownership would help end the legacy of segregation and increase generational wealth. So if those people care deeply about helping under-resourced borrowers, why are we moving backwards?
Since George Floyd, there were so many lenders that made commitments that they were going to put capital in directly into helping African-American communities and never put $1. Every one of those lenders should be held accountable. Every one of those CEOs should be held accountable.
They lack intentionality, Harris says. When a company needs to cut costs to improve on margin, executives will ruthlessly slash expenses wherever necessary. They'll lay you off in a heartbeat if it means getting the results they need. When a CEO announces a company-wide initiative to lend to 30% more Black borrowers, but only moves the needle 5%, no one is held accountable.
Stop doing business with people that haven't given you the results. What you want is more growth in the future, not the superficial hype of today.
For anyone wanting to hear more from Harris on what's wrong with DEI and how to fix it, listen to the full episode of Gated Communities at nationalmortgageprofessional.com. For The Interest, I'm Katie Jensen.
We all dream of owning a home, but for too long, if you didn't fit the mold, you were stuck. Stuck because the system worked for everyone except you. We've changed that. Angel AI uses advanced AI technology to give a 100% trusted solution and fast answers for worry-free financing, allowing you to achieve fair and equal access to lending. Angel AI. AI you can bank on.
For The Interest, I'm LaDonna Lockard. In reading and researching the past couple of weeks' economic news and data, trying to find any signs of positivity for the mortgage industry has me feeling like I'm trying to find a daisy in a snowstorm. The Fed met 2 weeks ago and decided to keep rates where they're at. I suppose this is kind of good news since they didn't raise the rate, even though inflation is higher than their benchmark goal. Home price growth has continued to rise, which again, I suppose is kind of good news if you're a seller, but bad news if you're a buyer. Buyers are continuing to sit on the sidelines, waiting for rates to come down, which makes sense considering a new report from Redfin reveals that the average American household needs to make almost $30,000 more than what they're currently making to afford a medium-priced home, which further supports the reason behind mortgage applications declining over the past few weeks. Additionally, home buyers now need about $56,000 more for a down payment, which is up 24% from a year ago when it was $44,850. This marks the largest increase since April of 2022. Thankfully, mortgage delinquencies and foreclosures have dropped, which is a solid indicator that although much of the mortgage industry news may seem bleak, the overall strength of the economy is still strong. With 3 anticipated federal rate cuts projected for this year, I'm holding out hope for the good news. The Fed is just waiting for the sunshine and summertime to warm this industry back up. For The Interest, I'm LaDonna Lockard.
In the world of finance, there's quite a tale of mortgage companies and their financial sale. They lend out money hoping for gain, but alas, it seems they're in quite some pain. For every loan they give, they start to bleed, losing cash faster than a stampede. They scratch their heads, wonder, and frown as their profits vanish swiftly down. With each mortgage signed, they're in a bind, watching their earnings slowly unwind. They thought they'd make a fortune, oh, so grand, but instead, it's slipping through their hand. Their spreadsheets wail, their budgets groan. As the writing spreads, they let out a moan. We'll make it up in volume, they cry, but alas, it seems that's just a lie. Their business model's a comedy of sorts, where they're the punchline of financial sports. They lend and they lend, but where's the delight when they lose money left and right? So here's to the mortgage company's plight, a lesson in finance shining so bright. Though they try and they strive, it seems they're stuck, losing money on every loan. Oh, what bad luck.
Welcome back to this week's Mortgage Meteorology, where we'll touch on all things to do with the overall climate of the housing market, not just in our neighborhood, but yours too. Ring the alarm because the January 2024 CoreLogic Case-Shiller indices are in. January home prices heated 6% year over year, up from the 5.6% logged in December. CoreLogic says this marked the fastest annual rate of home price increases since January 2022. CoreLogic's 10 and 20 city composite indices show that January home price growth in major metros exceeded the national rate, rising 7.4% and 6.6% respectively. All cities reported increases in annual prices for the second consecutive month. But let's take a look at some of those hot spots. Sunny San Diego took the lead with an 11.2% increase and was followed by lush Los Angeles at 8.6%. Shifting gears, existing home sales are sizzling per a new National Association of Realtors release. Among the 4 major U.S. regions, sales sweltered in the West, South, and Midwest and were mild and unchanged in the Northeast. Year over year, though, sales chilled in all regions. Total existing home sales, encompassing single-family homes, townhomes, condominiums, and co-ops, saw a significant rebound of 9.5% from January to February, after adjusting for seasonal fluctuations, reaching a brisk annual rate of 4.38 million. Year over year, sales were a bit frosty and cooled down 3.3%, shrinking from 4.53 million of last year. Let's hope that the housing market can eventually meet in the middle amid all this topsy-turvy activity. I'll meet you back here next week for your updated housing market barometer.
For more on these and all of today's top stories, go to nationalmortgageprofessional.com.